Hey everybody, it's Darren Garman, and I have been the go-to guy for real estate investors now for well over 30 years in terms of magnifying and helping them succeed beyond their wildest expectations as real estate investors, and have dealt with investors from not only all over the United States, but in many parts of the world. Okay, so the question I get a lot, dozens of times a year, each and every year, and it's been the case now for decades, is a question just like this. Here it is. I've got 300,000, 500,000, $1 million, $1.5 million. I've got this amount liquid ready to go in a real estate investment. I know I want to get involved in a real estate investment. Question is, which investment do I get involved in? Guys, this is the wrong question to be asking. And you may be saying something, hold on, Darren, what do you mean that's the wrong question? Sounds like a reasonable question to me. Well, it's not the first question that you need to ask yourself, especially if you're a very busy founder, sales leader, CEO, investor. If you're one of these kind of people, wrong question to ask. All right, Darren, so what's the right question to ask? What is the right question? Here's the right question you need to ask yourself before you go down that road, and it's simply this. Do I have the time, effort, and energy to be actively involved in order to get the kind of results in any of these real estate investments that I'm considering, outside of being the leader that I am in the area that I'm a leader right now? Okay, so let's go ahead and let's assume for a second that you've done that. And by the way, you better do that. Don't skip it. Okay, but let's assume you've done that. If you've done that and you've answered that question, the question I said you really need to ask first, you're going to come up with two answers. Either yes, yeah, Darren, I want to do this. I want to be actively involved in a real estate investment and oversee it and understand it and all that. Or the answer is, Darren, no. If I'm honest with myself, I'm not going to have the time, effort, and energy to be the kind of person I need to be in order to be the best I can be in that investment. Those are going to be your two answers. So let's talk about what you do. Let's say your answer is no. Your answer is, Darren, I want to be involved in real estate. I want to be involved in some real estate investing. But dude, I just don't have the time, effort, and energy to do it. I just know I just can't. If I'm realistic about it, I can't. So what do? Two simple things. Number one, find a joint venture partner to get involved with them passively in the investment area that you believe you want to be involved in. And this needs to be a joint venture partner that has track record. Okay, I'm talking 10, 15, 20 years of track record. You find, I call it the Warren Buffett of the real estate sector you want to be involved in. You align yourself with them, you team up with them, and you get involved with them passively in their opportunities, their next opportunity, etc. Okay, you save yourself a tremendous amount of time, especially if you've got someone that has a real track record that you vetted, that's worthy of being involved with as a partner. You want to be in self-storage, you want to flip houses, you want to be involved in commercial, whatever it is, find the Warren Buffett in those areas, align yourself with them, okay, and joint venture with them. Be passively involved in what they're doing and ride their coattails to investment success. That's what you do. A second part of that is I would be thinking about the investment sector to do that passive investing being something that you're somewhat familiar with or have some experience with. It doesn't have to be the case, but it helps. It helps with your ramp up period. It helps with in terms of knowing what's going down foundationally. So if you've got some experience, let's say in self-storage, you might want to find the Warren Buffett of self-storage and joint venture with them. Okay, if it's flipping houses, you've flipped a couple of homes maybe over the last 20, 30 years, maybe that's where you want to go. You see what I'm saying? So you want to be passively involved. You've decided that's probably the direction I want to go with my liquid funds I've got available. You want to A, joint venture with somebody that's the Warren Buffett in that sector, and B, you want to try to be in the sector that you've at least got some experience with. So that kind of handles the passive aspect. You've decided you think passive investing is the way to go. But let's say you want to be active. What do? You've decided, Darren, look, I really want to do this. I really want to move the pieces on the board here. I really want to be involved actively. What direction do I go? What investment? Do I flip houses, commercial, multifamily, self? What do I do? 5 things you need to consider if you're going to be what I would call active guy. Okay, 5 things. Number 1, and I kind of mentioned this before, you really want to go in the direction of an investment that you have some experience in and you would enjoy. Some experience in and you would enjoy. And when I say you would enjoy doing, I don't just mean you like doing it, but let's say you lost a little bit of money on that first investment. Let's say you lost a little bit of time, effort, and energy on that first investment, maybe more than what you expected. Not that you're going to be like happy about it. You think you'd have the attitude of, yeah, I've kind of learned something here. I'm a lot better. I'm a lot better off now knowing what I know now versus getting involved in it. If you can have that kind of an attitude, if you think the direction of investment you go, farmland, multifamily, flipping houses, you should go in that direction. Number 2, logistically, the investment's got to be close by. You want it like 5 miles from you, not 5,000 miles from you. If you're going to be actively involved, especially in your first 1 or 2 investments, you want it to be close by. You don't want to be doing this over Zoom. You don't want to be doing this over a conference call. You want to be doing this like right in front of you, knowing what's going on and being involved in what's happening. And that means logistically, it needs to be close to you. Number 3, just pick one. A lot of people come to me and they say, which investment's best? Which investment do I go into? Which one? Which sector? They all have advantages over the other, and they all have disadvantages. So there's no real good answer because they're all good. You just need to pick one and focus. And this is the key. Focus on that. Don't dabble a little bit in farmland and then dabble a little bit in office and dabble a little bit in self-storage and then dabble a little bit in multifamily. No. Focus. Your resources, especially your time and energy, are finite. Focus on one investment and just go blinders on, not distracted by the other ones. Because frankly, you know how it goes, guys. The other ones always are going to look better. Oh yeah, that looks good today. Maybe I might do that. Or a week later, well, wait a minute, that looks really good right now. Maybe I might want to do that. The grass always looks greener, doesn't it? Focus, tunnel vision on that investment. Okay, so that's number 3. Number 4, you're going to be actively involved doing it yourself. Don't put all of your liquid cash into the first investment. I'll say it again. Do not put all of your liquid cash into that first investment. Why? What if it's a learning experience instead of an investment? What if it is, right? You don't want that to be the case. So 15%, 20% of your liquid capital, have that go into the first investment so you can learn and understand and get a better feel for what's going on. And your risk level is so much lower if you do it that way versus putting all of your eggs in that one basket the very first time, and it turns out to be a very expensive and painful learning experience. You don't want that. Okay, that's number 4. Number 5, if you're going to be doing this actively yourself, find a mentor. Find that Warren Buffett in that area, connect with them so you can have those kinds of critical conversations you need in order to not only get ramped up as soon as you possibly can and build your foundation as best as you can, but ongoing information, sharing challenges, frustrations, wins, good news, bad news. Find that mentor in that area where you can have those kinds of conversations. Okay, guys, you've decided you've got this liquid cash, 300 grand, 200 grand, $1 million, $2 million. You want to put it in real estate. You're trying to decide which investment should I go into. Remember we said wrong question. Wrong question. You want to decide if you're going to be actively involved, if you have the capacity to do it or not, that no BS conversation. We talked about if the answer is no, we talked about what direction you need to go. If the answer is yes, we talked about what direction you need to go and the 5 things you need to do if you decide to go in that direction. Guys, if you go through this exercise, it will not only save you weeks or months of time, it will also save you and by extension earn you millions of dollars. Good luck. We'll talk to you later.